Okay, welcome back. 163 points on the Nifty, 14,445. So strong comeback underway. Jigar Mistry is co-founder of Buoyant Capital. He's joining us right now to tell us what he makes of the market. Jigar, thanks very much. Good to have you here. What's your sense, Jigar? A lot of your calls, and we've discussed many of those over the last many ones through 2020 as well, have worked out quite well. The markets have rewarded investors quite handsomely. But are you feeling a little anxious? Is it a bit discomforting, the pace of the entire move?
Good morning, Prashant. I think the markets are reacting to the act big comment that Janet Yellen made yesterday. And essentially, if the stimulus is going to be big, the emerging market underperformance has lasted almost a decade. So, markets are already trading 2 standard deviations above mean. And, when you are in that sort of a zone, it's always probable that, some things might get crossed more easily than one would ideally expect. Onto your question that, look, there are many businesses which appear as if they're fully valued and more. But for every few of those, you also have a lot of other businesses which essentially are not yet fully discovered, right? So you mentioned 2020. Among the themes that we have been discussing in 2020 was the relative banking underperformance, right? It was the largest seen in, I think, ever in the history of Indian markets. And that got corrected quite swiftly. The other trade essentially was the mid and small cap underperforming the main indices. And now when you look at them on a 1-year basis, they have started outperforming again. So I think for every time when the market appears as if, it's the new high, this hasn't happened before, but all of it draws from this historical precedent. And when it happened in the history, it was the first time that was happening as well. So I think one needs to be circumspect, but one needs to keep out looking for ideas where, things can be a lot more interesting going forward.
Jigar, just drilling it down to individual sectors and stocks. Now, IT earnings have looked good, but just purely going by the price reaction post the earnings, it appears to be priced in. So what should investors do now?
Hi, Rima. So, yeah, you're right. Not just IT, but when you look at the 3Q numbers, it's turning out rather well. And I think we sort of boil it down into 2 or 3 things, right? So IT obviously has reported very strong numbers, both on constant currency terms as well as margins. But a lot of other companies that are reporting are surprising on volumes. And we were having an internal discussion at Buoyant, and it looks like that there could be 3 reasons. One is that demand has been pent up. You saw that sort of scale up in autos and then fizzle out a little bit, especially in the 4-wheeler segment. But there are other things, like, for example, we were on a call yesterday and the unorganized industry per se has not been able to come back as swiftly as a lot of organized players. So whereas the market has been growing, the organized players, are growing disproportionately. And that is one theme that is playing out. And lastly, I think there is some amount of shift happening away from spends that you can't do into spends that you can do. For example, people would have wanted to travel to Europe and US and take holidays, and all of that isn't happening. And therefore, you're seeing some amount of inflated purchases in terms of these white goods, etc. So I think 3Q would continue to be surprising. Both, costs have not caught up, pent-up demand is driving the volumes. At the same time, the margins, once the trade sort of the economy opens up, might not be sustainable. Onto your questions, IT, I think not just, the pricing, they're now trading at valuations that, again, we haven't seen for a very, very long periods of time. The way we prefer to play it has historically been not through very large caps, but something like a Cyient, which we have discussed in the past, or even eClerx, which forms part of our portfolio. So for every sort of large company, which is, rightfully valued at a much higher valuation, we have this qualities medium cap businesses, which are available at a fraction of the valuation. And they're still very, very meaningful in terms of what they do.
Max is a case in point, right, Jigar?
Yes, Prashant, that we come back to discussing that stock every time.
Yeah, it's done well. It's done well. Of course, now we're awaiting whenever that approval comes through from IRDA. What else? That same theme. I mean, not picking up the most expensive in a sector, but looking for, equally good idea, but maybe trading at a cheaper valuation. What else can you sort of point us to?
Right. So banks, Prashant, we have discussed in the past, one was the global trade where, you saw the underperformance relative to Nifty, which was very, very high. But even within that spectrum, right, you have something like a federal bank. Now, very well-run business. I think there was some miscommunication over the last 2 years or so, where, the delivery wasn't as fine as investors would have expected, and therefore the stock got sold big time. When we first discussed it was trading at something like 0.6 times price to book. The management was very consistent in their comparison and the communication on all platforms where they're saying growth in businesses. They want to bring back numbers to 1% ROA by FY22. And if that happens, there is no reason why a regional bank, which is as strong as a federal, should continue to trade at 0.6 times. So that stock has done reasonably well as well. But I think there's still room for that to do well. So obviously, for every iBank that we own, we also have a federal. Similarly, in terms of retailing, we have discussed one stock, which is Aditya Birla Fashions. We have discussed Trent also in the past. But Aditya Birla Fashions, when you look at the valuations today, with the brand equity that it enjoys even in the private label space, that is a very attractive business to stay invested in. And lastly, in the last show, we were discussing about real estate, and somehow we have not really been able to come around to, buy a particular name. But even there, see, for every sort of cement company which might not be able to increase prices in the foreseeable future, you might have few plays in ceramics. Kajaria Ceramics, for example, look interesting to us. Within the cable space, we are interested in Finolex cables. So, the same theme, right? For the market that sounds relatively expensive, if you get a business which isn't really out there, then these are the few names that one can look to get in.
Thank you very much for joining in. So those are lots of ideas for our viewers, whether it's Kajaria Ceramics, Finolex Cable, Signed, eClerks in the IT pack, Max Financials, Aditya Birla Fashion Retail, and of course many others. Thanks again for joining in. It's time now for a CNBC TV 18 budget quiz.